Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Roblox. Roblox is a gaming platform where users share an experience, and I wanted to talk about the biggest driver here of why investors are uncertain, and you can see that the share price is quite flat over the last several months. So we're going to talk about its revenue growth rates. The biggest aspect that investors should really be thinking about is actually its bookings, and we're going to talk about its free cash flow generation, and finally we're going to talk about its valuation. So here's the thing, right? So revenue growth rates are really impressive, and you can see that for Q2 21 it was up 127% year over year. So this is obviously on the surface something that is highly growing at a high rate. That being said, bookings notes that investors should really be thinking about Roblox notes that investors should be thinking about bookings. So bookings is cash that comes in for users to buy Roblox tokens, and this cash comes up front and is recognized over a period of I think it's 23 months. So it's a leading indicator of where its revenue growth rates will go is the bookings. So if bookings are up meaningfully, that's good. It shows that there is a lot of revenue growth to come ahead. If bookings are not so strong as is the case here, that implies that over time the revenue growth rates will decelerate. So here's the graph. You can see here is year over year. You can see the line that is the gray line, and you can see that since that infamous Q2 2020 quarter, the bookings growth rate has been coming down from 229% year over year to 200 in Q3 of last year, and all the way to Q2 21 where it's at 35% year over year the growth. So it shows that as the quarters continue to go forward, the bookings aren't that strong. And in fact, for the August figure that we have, is the bookings are expected to come around 31% year over year growth. Now you may say, okay, yeah, management is being conservative and they're leaving themselves plenty of room for sandbagging, but ultimately even if bookings do come out for Q3 at approximately 35%, this is still not going to be commensurate with a high growth name. So investors are really having this discrepancy between a company that's growing on its revenue growth lines at more than 100% and the bookings, which is the leading indicator of where revenues will go over time, coming to, let's say, 35%. This is, once a company starts to fizzle out, investors are quite uncertain of the multiple that's worthwhile paying for the stock. Now I wanted to highlight one of the positive aspects of this investment. So Roblox is very free cash flow generative. Okay, so if we look out for the past 6 months, its free cash flow is 37% of revenue. So it's a company that very strongly changes the revenue into free cash flow. That's because a lot of the bookings come up front as deferred revenues. In SaaS companies they call it deferred revenue, but for all intents and purposes, this is cash that comes up front as the user looks to spend tokens on the platform. So it makes a lot of free cash flow. Even if we take away the stock-based compensation over the last 6 months, we see that Roblox has a 21% free cash flow generation profile. So it's a company that generates a substantial amount of free cash flow. That's good. That's a positive aspect here. So on the other side of the equation, investors are being asked to pay 15 times next year's revenues. Now, it's a company that is not growing at a particularly fast rate. It's a company that is going to be decelerating, so you have to put up with the multiple compression. Just for reference, you can look at DraftKings. DraftKings is a company that everybody knows is really unprofitable, but it's growing very steadily. It's like a leader in mobile gaming, betting, that kind of stuff, and it's just growing at such a fast rate and consistently doing so. And even in that case, investors are only paying approximately, I think it's 12 times next year's revenues. So why would you pay a higher multiple for something with unstable revenue growth rates? In the case of Roblox, I find it quite difficult to get behind this investment. I'm not a doom and gloom investor by any stretch of the imagination, but I do like to pick around and see. Typically, when the share price hasn't gone anywhere, investors' enthusiasm for the stock kind of dissipates, and if you're willing to do a little bit of work, you often find some worthwhile investments to get involved with. This is not the case in my opinion with Roblox. Don't forget, you can always see what kind of stocks I'm passionate about and where I'm deploying my capital right now. You can check out my marketplace. It's called Deep Value Returns, and I'll tell you the names of the stocks that I own and why, and you're welcome to pick out 1 or 2 investments that work out for you. You're welcome to do a totally free trial. It lasts for 14 days, and you can cancel anytime before the 14 days to see if it works for you, resonate with, get engaged with our investment community, of value investors. And I'm not going to replace you as the investor. I'm just going to be a place where if you're new to investing, or you're looking for ideas, you haven't got the time or inclination to get involved and pick out worthwhile investments, you want someone that has done the due diligence in the back end, come over to my marketplace. You're welcome to check out the reviews of my marketplace. They're 5-star reviews. Yeah, I'll look to see you next time. Okay, bye-bye.